Hey traders, this is Scott Barkley. This is lesson 7, final lesson, how to identify the targets, the currency ritual to do every day, and how to find the wide open spaces. So you've been through 6 lessons to get you here where you can actually now apply it in the market. So this is the last session, and we hope you've enjoyed it. Let's go take a look at the lesson. Okay, traders, this is lesson 7. This is where we're going to put it all together. Remember, while it looked like it was all complicated, today you'll see it's complex. It's not complicated. It's very simplistic, and you need to keep things simple. The nature of a trader is to make it more complicated than it actually is, all right? So our first stop every day is the dollar index. Now, you have to know the dollar index every single day. If you do not have a dollar index chart, then you need to go get a source for dollar index. We include it on our charts, but a lot of brokers don't. A lot of brokers can actually charge you extra for it because there is a separate data feed for it. So anyway, this is it. So if we were going to trade today, the first stop would be here. All right, so we go up here and you can see I already have a trend in place. This is the dollar index, okay? So I'm looking to see what is it telling me today. Well, you can see we have bulls in control over here. They're trying to make it happen. We're in the top part of the trend right up here. How do I know it's a trend? Well, because I can see the 1, 2, 3, 4, 5th wave, which may go all the way, extend all the way up to here, or may stop here. So I'm in a 5th wave to the upside on the US dollar index, all right? All right, now another clue here is the MACD, all right? So the MACD tells you, by the way, we're making the turn back to the upside, as you can see, like this, making a turn up to the outside. Now, this is probably the last move. How do I know that? Well, because if this pops up here like that, goes this far, this will not go up into here, right? So it'll only go up maybe this high right here, which means we now have divergence on the chart, and we would look for the sell. See, the chart's telling you exactly what to do. Today it says look for the buy. Tomorrow it's going to say, if we move up there, it'll most likely say, you better look for the sell. We're done with 5 waves, and now we're going to do an ABC to the downside. All right. So it's pretty simple. Notice that they know where the heart line is, the heart line is, and the heart line is. All right. The other thing we got to have is angles. So let me auto scale this. All right. So there's the angle right there. You can see it. And I'll put my little clock up there, and you can see it's less than 45 degrees. All right. So there are trending right there. All right, so that's how you do it. Now, that means that when you go to the charts today, if you're looking live, you now look for currencies that are correlated against that dollar index. So let me pull that up for you real quick here. So on our website, we have under first videos, there is a picture like this that you can open up, and you can take a picture and put it on your desk until you memorize it, okay? So you can see dollar CAD, dollar Swissy, dollar yen typically go with the dollar index. Why is that? Because the base currency is the dollar. But now we get to the exotics, and it's a different ball game. The EG goes with it, the EA goes with it, the pound Aussie goes with it, the euro New Zealand goes with it, but the pound New Zealand only half the time goes with it, and the pound Swissy only half the time, right? Because the base currency there is the pound, and sometimes the pound is strong on those currencies, right? So you know your correlations, and then you would know what to look for. A dollar Swissy, right? So the Swiss franc is always pegged to the dollar. So when you know what the Swiss franc is doing, then most likely you know what the dollar is doing, all right? Now, we have lots of ways to tell on our charts, because our charts are designed to do that and see if it's going up, 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 it's going up. So we have lots of other ways to see it, but just, you know, on MT4 Trading View, this is all you're going to have is this chart right here. All right, so you can see it's made the turn back to the upside, bulls are in control, and you can see you have a MACD break to the upside. So the dollar Swissy is confirming the dollar to the upside. See that? Very simple. All right. So what I'm going to do is I'm going to take 2 currencies. I'm going to do a trending currency and a ranging currency so that you can see the difference in how we put them together. But it's the same ritual, same thing every single day, right? So I'm going to go over here to some charts where I don't have anything on them, and I can just pull up, let's pull up the pound Aussie here. Pound Aussie was trending in the past. Right now it's a channel up to the top because you don't have waves, as you can see. But we're going to go back here to this past piece right over in here. Just squint it down, see how far back I got to go. All right, we'll take this piece right here. From here, I can't go. When I get down there, I don't want to go too far. I'm going to block off the top. This is how you practice it, by the way. This is the area I want to be looking. I'm going to be working on this area right in here. All right. And this is how you paper trade. Paper trading is not using a demo account. Paper trading is going back in the past and finding out how the currency actually moves as opposed to what you think you do. So we're going back in the past. We're going to see how this move transpired. How did the traders get it to happen? All right. So we're in a trend. So we're going to go ahead and put that trend on. Let me go up and just put it on for here for now, just so you can see it when I go up there, and I'll adjust it when I get up there. Notice how they prove the heart line to the downside right there. Right. So I'll go ahead and change it to a trend right here. And you see it. All right. All right. Now I'm going up to the day chart. And this is the only time I'm going to go to the day chart. The only time I'm going there. All right. So go back to that area that we blocked off right there. And what I have to find out is where's my top, where's my bottom. All right. So you can see here that we got a bottom down here. All right. Bottom down here, and it's multiple times it's touched, so you don't have to worry about going too far back. You got plenty of information there telling you that's the bottom, but the top is a different story. Okay, so here we are above the top right here, so you can see that we're above the top right here. So where would we go for the top? We would go to the next support above it, and we would put a line on that, because support in the past becomes resistance in the future. So this support right up here that supported this new high would be the new high that you would be shooting at. All right, we're going in the past here. So, all right, so once you got the day chart done, you don't come back here, all right, ever. All right, so I'm back here. Remember, we're only going to do this little piece right in here. All right, so all right, I'm going to back here. I'm going to make the candles a little bigger here. Now I'm down on a 240 chart, all right? And you can clearly see the trend right there, all right? So one of the things you want to look for is, how do I know it's a trend? Because I have a 1, a 2, a 3, a 4 that did not go back into 1, and it turned around and finished the 5th wave down. And that's exactly why they broke it out today or yesterday, was because they'd already done 5 waves to the downside. So that means they got to go in that direction. So if you know that you've got, that you got 5 waves already in play, you know you're going up. Well, what if you don't have 5 waves? You're here at the top of 4. Then you know you got a 5th wave left to the downside. All right. All right, so there we go. All right, so now we're going to pretend that this hasn't happened. I'm back here like this, and this is how you do it. You practice, you say, I'm going to pretend this has not happened yet. All right, so I'm going down in this area right down in here. So what do I need? I need a set of fibs down there. So I go back in the past, and I find a swing low and a swing high in that area. And you can see it's right here. All right, it's from this top right on there down to there right there. And that's what has to be fibbed. All right, so there we go. We fib it from the swing low to the swing high. Oh, get the right tool, Scott. All right, I'm going to go from the swing high to the swing low. Why? Because I'm anticipating going down. So I want to put the fibs on in the right direction. All right. Now, as soon as you put a fib on, you stop. And they got to prove to you without a shadow of a doubt. They know where these numbers are. They knew that number. 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 They knew this number. They knew this number. Right? They knew this number. They knew this number. They knew this number. Right? See that? They knew this number. They knew this number. They knew this number. See that? When you get that much information, you know that that's the right fibs. The market will tell you that's the right ones. You can use those. All right. So we're going back over here where we were in this area where we had blocked it off right here. See? And I'm just going to show it to you how did they use them. All right. So when they made the top up here, they went right down that fib. Up to the top, back to the fib. All right, we just do it this way, make it easier to see. All right, so up to the top, down to the fib, back up to the top, down to the fib, break that fib, down to the fib, break that fib, down to the fib. Where do they go? Next fib, down to there. Where's the next? Down to there. Where do they go after that? Down to there. And then right here, they made a valiant effort and just missed it. And that was the end of the 5th wave. And so that's why they did this. All right, so you can see that works. All right, now because I'm trending, I need support and resistance. All right. All right, so if I'm going down, I'm looking for support. If I'm going up, I'm looking for resistance. Okay, so if I'm going down and it's trending, that means we have to find the support and resistance. Now, you don't have to find them in ranges, but you do in a trend. So I'm going to go back in that area, and I'm going to find a downtrend in that area. And since I'm looking for support, what I'm looking for is resistance in that area. So I got to go find a down move in that area, and I finally see the moving averages coming down, so I'm getting close, and here we are. Right. So this is the area in the future. That's how far back I had to go. That was back over a month. Right. Looking for the lows. All right. And I take every new low, and here's a new low, and I take it back to up here and see if I have resistance. That's 2 candles to the left, 2 candles to the right, and I have one right there. All right. Here's the next low. Take that back up, and it's virtually the same, so I don't have to put it on. All right. So here's a new low here. I go back up here, and sure enough, there's 2 candles to the left and 2 candles to the right of that close in reverse right there. All right. There's a new low right here. I go back up here, and you can see that right there, right there. All right. Now, nothing over here makes a new low except this one, and this one does make a new low, and it goes back up to here. So those are the resistance I have to mark on the chart, so I know where the supports are. Let's see if I don't do that, and I get a great signal. What's going to happen? There's one right there. Sorry, just slightly below it, and there's one right here. And that covers that one right there. And then we got to have this one right here. Right. See, if I get a great trade and it's right in front of one of these resistances, supports, I don't want to make a trade. All right. So now we go back into the future, back to that area where we were just working. All right. All right. Now we got virtually everything on the chart that we need. All right. So let's go back to this area. Here we go. All right. So here, now we'll let's take a look and see. What did they do? Let me make these candles a little bigger. It'll be real easy to see. All right. So when they popped back up here and made the turn down the downside, they went right to the pip to this one right there. I'll dash it. You can see it. Dash. All right. To the pip to that support. Do they know it? Absolutely. Then when they broke here, they went just a few pips more, and they took that one out right here. Can't quite get on it because there's a fib underneath it, right on the fib also. All right, then it came down to the fib here, and they went down to the fib here, and then it went down to the fib here, flew right through that bottom, and that was it. All right, now let's take a look and see, what did they do? All right, so here's this is actually your trend, where your trade started up here. It's a trade, this is the 1 wave, here's the 2 wave, here's the 3 wave, all right, there's the 4 wave up there, right there, and there's the 5 wave. And that's why they had to break it out, because there is no such thing as the 6 wave. So once they have finished 5 waves to the downside, that's it. Now, you can actually see how they made it happen up here also. How did they make it happen? Well, they had a descending wedge here. All right, so they broke that right there. All right, then they pulled back and they went to the fib, and this thing right here, right to the fib, and then they put in a flag pattern right here, with a continuation to the downside, and there it is. All right. So what did they do? A descending wedge and a flag. That's all they did in that trend. That's it. They're not doing fancy stuff. And the area in here are the trades. These are the wide open spaces where you have an opportunity to trade. And the other thing you'll know is where the ATR is for that day. I'm not going back that far. I'm going to do that we'll do that over here on current. Right. So go over to current. All right, and I'm going to go down to a 60-minute chart, all right, and I'm looking for the 5 o'clock candle, all right, and we pull up the ATR here, all right, so this would be live now, not in the past, all right, so I'm looking for where's my opportunity. I know I'm going up. You see MACD says you're going up. You got close and reverse, higher lows, all right, there you go. And so pound Aussie has an ATR of 136 pips. I simply go find the 5 o'clock candle from yesterday, and let's see where you are. Right there. It's that bull candle right there. I click on the bottom of that. I'm going up for 136 pips. 136. There we go. And this is what's left of it. All right. They've already done, let's see, 90 pips. All right, right to there. And they still have about 70 pips left of this move since that closed in reverse right there. So I would know I have an opportunity up here without any problem. See? All right. All right. Now, in this case, I need to find the fib extensions because I'm up above that area. So what do? I find the dominant move in the past right here, which is this one right here, from the swing low to the swing high, right there. Right. Notice I retrace to the 50%, retrace to the 618, trying to get it going. All right, so there we go. So now you can see exactly where the trade is. Here's the trade, all right here. It's a two-part trade. There it is, right there. It's actually three parts because this is the first part right here. That's already happened. So where's the next one? So there's one, here's two, and the fib delineates where trade three is. See how easy it is to see? Right up there to the target. All right, there you go. All right, let's do a ranging one. Now, the ranging one is much simpler. Let's see, I think pound dollar is in a nice range that we can go look at. Yeah, here we go. All right, so we'll take a look at this move. Now, let's just do this move right. That was fine. And we go up to 240 first. All right, let's take the down move here. This down move once again. All right, so we're going to put it in a box. All right, so it's ranging, right? How can I tell? Well, you can see, hold on. No, there's a range, right? All right. So my first job is to find the bottom. All right, so there's a bottom in place right down here. I'm going to put a line on it right here. Now I have to find out, why did they turn here? What's the reason that they turned here? So I go back in the past and I see if I can find it. How many touches do they have back here? You can see a couple in there, not many in there, not there. There's a couple right there, but not very many. Actually, I don't think that's the bottom. So let me go redo that real quickly. All right, so it looks like they blew through the bottom, and the bottom was actually here. That was the bottom. They put the extra down there. Let's go check that and see. I'm glad this happened, so you can see. Oh, okay. All right. Now let's go see if it. Now you can see all these tops right here. Tops. All right. Keep going back. All right. Tops right there, and that's all the way back. So it looks like that was the actual bottom, and they just blew through it by a little bit. All right. Now I got to find my top. Where's my top? My top is former support, now resistance. All right, so that former support is right up in here, right there. Might be that one for that support. Maybe they used that twice right there. Okay, so support over here. Remember this: support here, becomes resistance, and there it is. So that's the top. All right, so what am I looking at? This is the range that I'm trading in. Think of it like a football field. There's a goal up here, and there's a goal down here. So this is where I'm at right now. All right, so now I am done with the day chart. I don't need anything more in the day chart. I now go down to the 240. All right, bankers trade the 240 and they enter and exit on the 60. All right, so when you hear somebody saying, well, the day chart top is here. Well, look where I am in relation to that. That's all bull. You don't need any of that. That's all junk. All right, so now I'm down here in a 240 chart. All right, and you can quickly see that coming down here. So let's pretend this didn't happen. We're right over here. This is how you practice it. You pretend it didn't happen because the school is here. It tells you what they did. So you pretend it didn't happen and say, okay, I'm going to find, see if I can find where they're going to try to go. So I'm going to do the swing high, the swing low. Why am I doing it that way? Because I need the extensions below if they break out below. All right, then you stop. And they got to prove to you they know the numbers. Prove to you that they know the numbers. Prove to you know the numbers. Prove to me. 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 All right? See that? That's a lot. They're telling you, yep, you got the numbers. Okay, so now I know their numbers. All right. So when I make the turn over here, I know where the trades are. All right. So I know the potential trades are right here. There's a trade right there. 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 And there's a possibility of a trade right there. And of course, we wouldn't know that was there yet. That would be our bottom. All right. So that we know that right now. All right. So once we make the turn up here, here's the turn. There's the first turn. All right. So we begin the process of finding where the trend is or the channel. So I'm going to put this channel on here, and you're going to see immediately what the problem is. It's too shallow. You see that? It is too shallow. So with this big move down here, they're going to have to bring it up to set the new channel, right? Because that's way too shallow. Nobody be interested in trading it. But once they finish this move and they pull it up there, there we go. Right there, right there. All right, now we take this channel off and we go, we connect these two dots right here, right here. right there. Now, the auto scale this so you can see it a little better and pull the candles to full size here. And auto scale. All right, so there we go. All right, now watch the clock. How are we doing? Doing great. See that? All right, it's a little steeper, but that's because it's a channel. All right, so it's a channel. All right, and channels are steeper, can be. All right, so there we go. All right, now I don't need anything in here at all. All I need is the fibs. Why? Because I already proved to me they're going to do them right there. So how did they make this whole thing happen? Of course, we wouldn't have known this until they did that. We would have been targeting this bottom right here because that's where this one was. All right, so how did they make it happen? All right, so they did a bear flag, and you can see what they did with that. That's what they did with it. At the top, after 1, 2, 3. You had a triple top, all right, then you made a lower high right here, lower high, all right, and down we go. So those lower highs up there with a triple top in play and a bear flag set up this whole move, right? And actually they are trending. It's not a trend, but it's doing a fractal. It's called fractal trend, fractals, and they are doing 5 waves in here. So I'll show it to you. You got 1, 2, 3, 4, 5. And that's why it's broken out over here, because there's no such thing as a 6 waves. So that's why they have to go up. All right, so they went to the bottom of the range, and now we're going back up to the upside. All right, so there we go. All right, so how did they make it all happen? All right, so you can see they did a bear flag here. All right, see what they did with it? That's what they did with it. All right, then over here they did an ABC to keep it going. A, B, C, exhaustion wick. And that's how they kept it going. So what did they do in here? They did 2 bear flags and 1 pullback and an ABC. Not rocket science, folks. And where did they go? Right to the targets. Where? The big boys' targets. All right. Anybody else's targets are worthless. The big boys make this happen. So what do you got to do? I got to practice it. I got to practice it. I got to practice it. And, you know, the optimum is 300 times on the fibs, on the retracements, and 300 on the extensions. All right. You pop over here the pound dollar. Now, we have lots of other ways to check to prove the trades, what a trade is doing. Right. And you can see right in here. Let me go over here. So you can see, what does the chart say here? The chart says we're going down, 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 down. There you go. And what did it do? Right to its ATR target right there. This morning, right there. So ATR target was right here at pound dollar, 93 pips. Okay, so that's a 1600 candle. This should be 93 pips right here. And it is 93 pips. All right, what did they do? Drove it straight down to the pip to its ATR target, and that was it. 93 pips, 93 pips. All right. What set that up? Can everybody see the A, B, C corrective move for a bear flag? And they finished the move right there. Pretty cool. All right, I hope that helps you. Love to have you come over and join us. We have a live room every day, 4 days a week. You can come sit in there and hang out. Won't cost you a dime. And check the links below. Might be something you want.